Okay, so what's happening in the real estate market here in Orange County? Well, this is a market update. The date right now, it's in May of 2025. I do these updates roughly once every 6 months. So if you subscribe to the channel, then you'll get access to that as soon as it comes out. But we have an interesting picture because there's some things happening at the national level which are potentially concerning. And then we've got our market here in Orange County. So I'm going to cover both of those and I'll talk about some of those kind of red flags that we see on the horizon. For the most part, the real estate market is doing well. It's strong and it continues to appreciate. On the national level, we see inventory higher by about 18% compared to a year ago. 1 year ago, so it's 18% more inventory on the market, more houses for sale than there were this time last year. Now, I should mention that the inventory levels have been low for like 4 years, 5 years. So really the last year where we had a lot of inventory was 2019, which was quite a robust year, like a peak year, if you will, where there was a lot of inventory. But then COVID came and kind of the entire market got turned upside down. The inventory is low, and that's been going on for a while. So even though the inventory is higher, 18% nationwide, by the way, it's up 33% here in Orange County. So the inventory levels have gone up, relatively speaking, more here in Orange County than they have nationwide. But in any case, it's still lower than what we had in 2019. So what we're seeing is, the market's slowly coming back into balance. It's been a seller's market for 4 or 5 years, really hard for buyers to get in, very competitive. But now we're starting to see it moderate just a little bit. We're not seeing price declines. We are in some states. And again, I'll talk about those in a second. The primary culprits here, you might guess it on your own. It's all the states that did really well after COVID. So you've got Florida, Georgia, Tennessee. What else? We got Texas, of course. We've got Arizona, Nevada. So those states did really well after COVID, and now they're taking a bit of a hit. Meanwhile, here in California, we still have really strong demand. Even though we have more inventory, we also have a lot of demand. And keep in mind, we had all the fires here in Los Angeles at the beginning of 2025. 18,000 structures were burned. And so imagine all those people who lived in those 18,000 structures. They're all basically customers looking for new homes to live in. Now, of course, some of them moved away, some of them already have their situation figured out, but there's a lot of people out there that are still looking for homes. And that affects the demand here locally, probably for the next 4 or 5 years at least. And in fact, the construction industry is going to be booming here for the next 7 to 10 years because we're literally rebuilding these entire neighborhoods. So, okay, nationwide, inventory is up 18%. It's about 4 months worth of inventory. So how long does it take for that inventory to get chewed through by the market? Nationwide, about 4 months. Here in Orange County, inventory is up 33%, but meanwhile, it's only 2.5 to 3 months worth of inventory. So the homes are selling quicker here in Orange County because I think, for the most part, because we have more demand. We have a more robust, a more desirable living environment. So people are moving here all the time. And so it keeps the housing market strong. So the average home nationwide is on the market for 48 to 50 days. So we're talking about, month and a half, approaching 2 months. Whereas here in Orange County, average days on market is like 35, 36 days. So it's basically a month. So if you're a homeowner and you want to sell your house, that's going to sell in a month. It's going to mean, or even less if it's done properly, it could be less. But the average days on market right now is 35, 36 days. Let's also talk about median income or median home price. So nationwide, the median home price is $404,000, which is pretty incredible. It's gone up a lot in the last 10 years, that's for sure. But here in Orange County, it's 1.2 million. Now, interestingly, across the nationwide statistics and also here in Orange County, in both cases, the expected appreciation over the next 12 months is 2 to 4%. So in both cases, even though there's different circumstances, they're actually expecting the same appreciation in both cases. So 1.2 million today in Orange County would turn into basically 1.25 to 1.3 million 1 year from now. So, this affects buyers differently than it affects sellers. Like if you're just a seller and you're not going to be buying anything else, then you want to maybe hold off and try and get more money for your house. But if you're selling one house and buying another, then those two offset. And if you're just buying a house for the first time, the sooner you can get into the market, the better. Now, could we have some sort of a negative catalyst, which could all of a sudden come in and change the market and we could see price declines? Of course. And that's exactly what happened with COVID, where it came up out of the blue, essentially, and it had a giant impact, of course, not only on real estate, but on every industry. That could happen again. So some unforeseen thing could come up and affect the market. But barring a major negative catalyst, we can expect home prices to stay steady and grow slightly, 2 to 4% over the next year. By the way, here in Orange County, the appreciation of the most recent 12 months was 9%, which is a huge appreciation for 1 year. So the appreciation is slowing, but it's still expected to be positive. Now, what's happening in these states, which is kind of a little bit of a red flag? So again, we're talking about Texas, Florida, we're talking about Georgia, Tennessee, Arizona. These are the states that are struggling. Florida is struggling the most right now. They've got a real, their prices are coming down. They've got a lot of supply. But what's happening? Well, we have to look at, or maybe not, we don't have to, but the most interesting thing that we can do is look at the giant institutional landlords that own thousands and thousands of homes. We're talking about huge publicly traded companies that they raise money on Wall Street, billions of dollars, and they go out and they buy homes by the hundred, and they accumulate huge portfolios of rental homes. So who are the big players in that space and what are they doing? Well, the biggest one in the country is called Progress Residential. They have 90,000 homes across the country. Next up, Invitation Homes. They have 83,000 homes, just those two companies. Number 3, American Homes for Rent. They have 60,000 homes in their portfolio. Blackstone has 55,000 homes in their portfolio. So these are huge companies that own thousands and thousands of homes. Now, interestingly, their combined ownership still only accounts for 2.4% of the homes nationwide. Just 2.4%. So it's still actually quite a low percentage. So I'm not saying that these huge companies are affecting the prices in terms of like bidding up demand for these homes, but they're starting to unload properties, and they're unloading them in a little bit of a panic in some cases. It's not across the board, but we're starting to see this certainly in Florida. We're seeing it in Tennessee. We're seeing it in Texas, where these companies are selling some of their homes quick. And I just read a story just recently about a home that really needed to have its carpets changed because the carpets were really destroyed. The company didn't even do it. They just put it on the market and sold it as is. So why is that a red flag? Well, that means that they see some risk. And I don't know what they see, right? We don't know what it is that they see, but they see something because they're getting out of some of these properties and they're getting out of them really quickly. So that particular home, and I've read about a whole bunch of others, were being sold for kind of 15% below the market, in a couple of cases even 20% below the market. So what happens when those properties sell? Well, a property that's sold becomes a comp, a comparable property. And it's the comps that determine the price of other homes. So that when you appraise a property, you compare the subject property with comps, other properties that have sold recently, and you combine that information to determine a value. So if you've got companies that are unloading some of these properties at a 15% discount, over a period of time, those become the comps that are used to price all the other homes in the market. Okay, so that's the contagion risk that I was referring to earlier. It can spread. Right now, again, there's no inclination that this is going to happen here in California. We have a very robust real estate market here in California, but it definitely is happening in some of these other states. And we're just going to have to wait and see how it plays out. But right now, the large companies, the large institutional landlords, they do see some risk. They're not selling all their properties, but they're selling some, and they're selling them in a hurry. So it'll be interesting to see what happens. But again, barring any major unforeseen negative catalyst, the market here is strong. They're expecting 2 to 4% appreciation over the next 12 months. And I'm going to continue to do these updates once every 6 months. So if you subscribe to the channel, then you'll certainly get access to those as soon as they become available. Thanks for watching this one, and we'll see you soon.